Esther Gulius and E.G. Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Everybody, this is the tax lady. And, I'm just going to be yelling at you for the next hour to finish up your deductions because, heck, we got like 7 hours until midnight or 8 hours till midnight. So we certainly want to make sure that we can end up 2016 in your corner. So again, if you're getting ready for your New Year's Eve party, you're going to get all gussied up, or maybe you're just going to hunker around the fire and cozy up tonight and usher in the new year. We want to help you to get ready for the end of 16 and the beginning of 17. And I'm joined in studio today with Tim Eliason. Hey, Tim, how you doing?
Happy New Year. I guess if we were celebrating in Australia, we'd already be well into 2007.
That is the truth. And Christopher Fabian. Hey, Chris, how you doing?
Hello, Esther.
Hello, Christopher. So, okay, so let's, again, 803-0930, 803-0930, star 930 on a cell phone. And, okay, this is it, right? I mean, you got, it's 3 o'clock, 3:08, so we got a few more hours. I don't know if the banks are still open, but if you're 70 and a half and you haven't taken out your RMD, buddy, you're really at the end of your rope. You got to do it, or else there's a penalty of 50% of the amount that you didn't take out. And so Auntie Esther's been telling you about that. So if you're 70 and a half, haven't taken money out of your IRAs, out of your pension plans or annuities, you only have a few more hours to do that to avoid a 50% penalty. The other thing is contributions. You have till midnight tonight to write your checks if you're getting ready to do charitable giving and you haven't done it. Midnight tonight is the deadline for 2016 to maximize that charitable contribution. And again, we're talking about, since tax rates are higher in 2016 than 2017, because Trump is projecting a tax decrease, you want to get those deductions loaded up into 2016. The other thing is, I think, isn't Lowe's and Home Depot still open today?
Oh, I'm sure they are.
Yeah, well, if you wanted to go get insulation, what a last-minute surprise that would be. Insulation, things of that nature, to make your home more fuel efficient. The energy credit is gone at the end of this year, so you have time to do that today. If you're somebody that's going to owe New York State money, write out your estimate tonight. Now, why is that important that they write that out tonight, you guys?
As long as it's dated today, it counts for this year, so that's part of your itemized deductions on your federal return.
Right. So if you were going to owe New York State $5,000, write them a check tonight, because if you're in the 25% tax bracket, you save $1,250 by doing that tonight. That seems like a really good thing.
Exactly.
Yep.
Exactly.
Right? Okay, and the other thing is ITINs. ITINs expire tonight at midnight. So if you have an old taxpayer identification number and you haven't been using it, you need to go onto the IRS website and renew your ITIN, or else as of the end of tonight, that ITIN is going to expire, and that's no longer going to be available for you to use, and you're going to have to reapply, which means that when you're doing your tax return in January or February, if you have to get your ITIN redone, it might cause your refund to be delayed till April, May, June, or July. So you want to make sure you renew your ITIN tonight if you're somebody that has a taxpayer identification number. Not a social security number, but a taxpayer identification number. You guys want to give an example of someone that might have an ITIN?
Well, someone who maybe is a Canadian resident and lives over here with their husband or wife, and they have an ITIN because they don't have a social. They're not a legal U.S. resident.
That's exactly
they haven't
right.
filed a return for a while. That ITIN would go bye-bye. And so now when the husband...
And then they have to reapply for it. So do it tonight. You can go to the IRS website under ITIN and re-up your taxpayer identification number. Okay, real estate taxes, medical expenses, business equipment, vehicle. You can kind of like rush down to your car dealership today and buy a 6,000-pound gross vehicle weight vehicle that you use in business, and you can write up to $25,000 off. And, you got 6 hours to do that. Just think how happy the car dealership would be and how happy you'd be. Saving $10,000 in the last 6 hours of 2016. So those are last-minute things that I thought was important for people to think about. Tim, Chris, anything else you think that people need to think about for 16?
You talk about charity and getting that in, getting your check written. I know last year on New Year's, me and my wife were at a restaurant, and they have one of those kiosk game things on the table, and one of them was, inside of it was a gift to St. Jude's, and we knew we needed to do some more, so we did $200 at dinner on that machine, and we saved our receipt. So, there's still lots of ways to donate to charity.
Right. It's also your checkbook, too, right?
That's right.
I will tell you this week, I don't wait till the stroke of midnight, but I looked at all of my contributions that I've made for the year, and I wanted to make sure that, because I'm a tither, I believe in giving 10% plus, and so I looked and I thought, I'm a little short, so I finished up my charitable, and obviously I believe in that spiritually, but I also can know that it's good for your tax return. So if you're that kind of a person and you're looking at a great way to get a tax deduction and bless somebody, this is the time to do it. Anything else, Tim, that you can think of?
Well, you brought up the point at New Year's resolution to clean out your closet, and hopefully that you're going to go on a diet, so all those clothes that won't fit anymore, you can take them off.
Yeah, that's true. That's true. I've been doing that New Year's resolution for about 30 years now.
Yeah, I know.
And I lose and gain and gain and lose. It's such a hard thing.
Yep, but cleaning out those closets, or, in my case, I have a young man that's going to be moving out. We're getting rid of the stuff in his house so he can't come home. So. That's kind of a bittersweet kind of thing. It is, but it's that time to fly the nest. So
that's true. And when you do, if you're cleaning out your closet tonight and you're going to drop it off at the attended donation center, because you need that receipt that says that you did that. You need to write down what you gave, the fair market value of it, if you were at a garage sale. And SalvationArmy.org has a great online list. And I always think, it's so easy with your camera. Take a picture of it, too.
Exactly.
Right? I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. If you want to call us at our toll-free number, it's 1-800-616-9236. I'm joined in the studio with Tim Eliason, who's our assistant district manager. He is like our healthcare navigator guru, so if you're wondering about that, he'll help you with that. I'm Esther Golias, the tax lady. Christopher Fabian, our vice president in charge of tax operations, is on the phone, and we can help you. Let's see, why don't we go to the phones, and I think we have Janine. Hey, Janine, how can we help you? Or Jenny? Hello, Jenny. I cannot hear Jenny at all.
Oh, she's breaking up really bad.
Do you hear her, Tim?
I know. She's breaking up on my end.
You know what, Jen? Why don't you give us a call back at the station? I think maybe you're on a cell phone and you're breaking up, and then we'll reintroduce your phone call and take care of your questions. Anyway, we're going to take a short break. On the other side, we'll be back with your phone calls, 803-0930, 803-0930, star 930 on cell phone, and Jen, call us back on the other side. We'll see you on the other side. From EG Tax, and hey, in 7 hours we're in a brand new tax year, and 2016 is over and done, and the die is cast. So for all 2016 questions, 2017 is upon us. I'm from EG Tax. I'm the tax lady, and I want to help you. And we're joined in studio with Tim Eliason. He's our assistant district manager. He's also a healthcare navigator. And if you have any questions regarding your healthcare penalties, your health insurance, Tim is the guy you want to talk to. And Christopher Fabian, our vice president in charge of tax operations, he's on the phone, and we're here to help you. And I guess, Jeannie is back on the phone. Hey, Jeannie, how can we help you?
Hi, I have a tax question for you.
Yes, I can hear you, Jeannie.
It decided to cancel the health and welfare fund, and whatever money that was left over in it, they decided to disperse it with the employees. But they taxed it and they sent it in like a W-2 as regular income, and they taxed it as regular income and Social Security and Medicare. And I was just wondering why, because it was health and welfare fund. But basically, it should have went to like a health package where you could use it in the future.
But it didn't.
What is your opinion?
See, that's the whole thing. Is it didn't. So what you ended up is you got a benefit in of money that you can spend that would have normally gone to a tax-free employee benefit fund, which didn't. And so now you have the money and you can spend it in any way that you want. So when it comes under your employer's kind of a cafeteria plan where it can go to health matters, that's a complete tax-free benefit provided to you as an employee. But when the money comes to you directly and you can do whatever you want, then it would be taxable wages.
It becomes taxable at that point.
Right.
Okay.
All right. Well, Happy New Year, Jen.
Now I'll continue listening to your good advice.
Oh, thank you, Jen. Bye-bye. It's actually Jean.
Bye.
It's not Jenny, it's Jeannie. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 to cell phone. And we have Barb from Holland on the phone. Hi, Barb. How can we help you?
Hi, Esther. How are you?
I'm great.
Thank you for taking my call. My situation is I am 62, and I've been getting SSD for about 6 months, or 6 years, I'm sorry. And my mom recently passed in August. Her estate is still in probate, but I was told I have to do taxes now because of all the different things that transpired. Is this the case? I have not filed income tax in about 6-7 years, something like that, ever since I got the SSD because my income was so low.
Okay, so let me ask you a couple questions. So has the estate already closed, or is the estate still in?
Estate is still in probate, ma'am.
Okay, so what I think the attorney was probably telling you is that you have to do a tax return for your mother unless some of the assets from your mother's estates have already been attributed to you, and you have income and expenses, or he's going to issue you a K-1 from the estate with taxable income. Wouldn't you agree with that, Tim and Chris?
Well, I like I said, we are waiting for, he says probably March, her probate will be ended, but we did receive, I am a beneficiary to annuity.
Pension plan?
Annuity.
Yeah.
That would mean the money you received from the annuity would be taxable to you. So depending on how much mom bought the annuity for, so say she bought it for $50,000 and it was worth $75,000 now, there's a $25,000 growth that someone would have to pay tax on.
Right.
Since she had beneficiaries, that tax would then go on to the beneficiaries once they took the money out of the annuity.
Now, that does not mean, Barb, necessarily that you're going to owe taxes. It just means that you might have to file a return. Did Mom live with you, or did she live on her own?
No, my mom lived on her own. Actually, there was 5 of us. We did receive a trust, but it was tax-free. My dad set up a trust for us. But, like I said, the annuity part is probably, I am receiving a small amount every month from the annuity to help me live, and that's the way
You may find that after your standard deduction and
really
personal
need
exemption,
to file that, correct?
you may find that after your personal exemption and standard deduction, you're not going to pay any taxes, but you're going to have to file a return just to show the Internal Revenue Service that you're under those minimum filing requirements. So
because within this thing that's going on with my mom's estate, also she willed a house to me, which is the house I live in. But I'm understanding until I sign that deed, I don't really have to do anything about that either, correct? It's hanging in limbo.
So Barb, you live in Mom's house, right?
Yes.
Okay, and you have over more than 2 years in a row?
I've lived in my mom's house for a long, long time.
Okay, and you actually are inheriting it? It was not a gift. You were actually inheriting it.
Yes, it's in the will. Yes, ma'am.
All right, so you get a stepped-up basis on the fair market value of the house on the date of mom's death, which means that it's going to be if you sold it right now, there would be no taxable gain. Even if you sold it at any point in time in the future, the first $250,000 of gain is going to be tax-free anyway because you lived in it 2 out of the last 5 years. So you have no problem on mom's house.
Okay, ma'am. Okay.
Okay?
But I will go. My daughter goes to one of your agents in Springville, and I will go there.
Oh, well, thank you very much, Barb. We really appreciate that.
Thank you. In fact, I've known you in the...
Merry Christmas. Happy New Year.
Yeah, you too. Thank you.
Thank you, dear.
Appreciate
Bye-bye.
it.
I'm Esther Gullius, the tax lady from EG Tax. I'm joined in studio with Tim Eliason, our assistant district manager and healthcare navigator guru smart guy.
Thank
and
you.
Christopher Fabian, our vice president of tax operations. And if you have any tax questions, you can give us a call at 803-0930, 803-0930, star 930 on a cell phone. And we're going to talk to you about the upcoming 2007 tax law changes. They never keep things the same way. But in the meantime, let's talk to Jeff, who's on the phone from Lockport. Hey, Jeff, how can we help you?
Hey, how are you?
Good. What can we help you with, sir?
I'm in a 457 deferred compensation plan, and I remember last weekend you guys talked about saying 18,000 was the max you could put in.
Well, unless you're 50 or older.
Correct, right? Which I'm not, and I'm not doing a retirement catch-up or anything.
Okay.
Now, my question is, I'm also in an IRA, which takes out of my paycheck also, but that's after tax. So if I was over 18,000,
okay, because that would be a Roth then, right?
I'm sorry.
That would be you've already paid taxes on the money that you're putting in to your IRA.
Right?
So that would be a Roth.
Anything to do with the 457.
Right. So you can put up to 18,000 if you're age 50 or under into a 457, 401k, 203, 403b plan, and that's fine. Once you're 50 or older, you can go up to 24,000. If you're in an SEP IRA, solo 401k, you can do 52,000. But you can also put money into a Roth IRA over and above that, which would be $5,500, but that's not deductible. It's not taxable when you take it out, provided you wait till you're age 59 and a half or 5 years after you reach the age of 59 and a half. And then it'll be completely tax-free. But you're entitled to put money into a Roth as well, which you have.
Right. All right.
Okay.
Easy enough. Thank you.
You're welcome, sir. Happy New Year.
Happy New Year. Bye.
Thank you. I'm Esther Gullius, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. Are you guys doing anything tonight? Or you got any plans? Chris, you got something cooking?
Oh, going to a gala with my family.
A gala?
Ooh, black tie?
You seem very gala-ish to me. Are you a gala kind of guy?
Not a gala person, but...
Does this mean black tie, tuxedo, the whole...
Well, they said men just have to wear nice suits. They're waving the tuxedo line this year.
Oh, I would have paid to see you in a tuxedo. That would have been good.
Isn't it true men hate those kind of things?
I enjoy them.
Oh, you do?
I do. I love those settings. I love that, when you have to decide what are the 5 forks you got to use and all that stuff.
Oh, my gosh. Wow, I think Chris needs you tonight.
Well, I'm just a text away, so if you need to know which fork to use, just let me know. Send a picture of them, and I'll tell you.
Everything with my fingers.
That works too. That works too. So.
Well, actually, my husband and I are going to a formal affair tonight too, and I have like 3 long dresses, and I'm just not sure which one to put on. So I can identify with you, Chris. The difference is ladies like to get dressed up, and my husband said, I heard him the other day talking to a friend, and they said, well, what are you wearing tonight, Saturday night, Bill? And he said, I'm just wearing a sport jacket and open shirt collar. And I said, no, you're not. You're putting on a tie. And he said, no, I don't want to put on a tie. And I said, you got to wear a tie, So you got to dress you guys up, except for Tim. Maybe I'm going to make Tim my date next year.
All right, I can do that. Yeah, I'll
Okay.
dust off the tux.
Let's
That's
go
all
back to
right.
the phones, and we have, let's see, Jeff from East Aurora.
Yes, the day of
Hey,
Jeff's.
Jeff, how can we help you?
Thank you. I have a question regarding purchases to do a major home improvement. I'm looking at about $10,000 worth of material for hardwood floors, and I was wondering if there's any way from a sales tax perspective, whether that's non-taxable or tax refundable.
Okay, well, first of all, he should look at a capital, that would be a capital improvement. So he would get a sales tax exemption certificate so that he could give it to the big box store so that he doesn't have to pay sales tax on it, right?
Exactly.
Right.
So if you do get that exemption, then you give it to Lowe's, Home Depot, whoever it is, then they won't charge you the sales tax because it's definitely a capital improvement.
Okay, and if the purchase was already made, is that something that I could take off my taxes then?
Okay, so why don't you guys talk to him about sales taxes?
Yeah, well, sales tax is part of your itemized deduction, so you could use it on your Schedule A, but you would have to add up all your sales tax for the whole year, and that figure would have to be more than what your state withholdings were or your taxes paid if you're self-employed and you pay an estimate, whatever that figure is. So you take whichever higher, your state tax paid or your sales tax paid.
But if he bought a car with the chart figure, he could add it on, but not for something like a non-moving vehicle, correct?
Correct.
Exactly. Or a camper. You could buy a camper.
Or a camper, right, but not for floors.
No.
So the floors, he needs all the receipts for a moving vehicle. He'd take the sales tax figure from the chart, make sure it's increased for the Erie County because that's the wrong figure in the chart, and then to that you could add a moving vehicle, but not if it's a non-moving vehicle. He'd have to have all those sales tax receipts added together, right?
Correct.
Okay, I'm Esther Goulias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on your cell phone. We're going to break for news, and we'll be back with your questions and the 2017 tax changes on the other side.
Here comes the sun, I say.
Upstate New York, Western New York, you love the sun because this time of year we don't see too much sun. I'm Esther Goulias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on your cell phone. And I will tell you, all of our tax offices are going to open when, Chris?
Wednesday the 18th.
Oh, good job. Jolly good job. So the 18th, well, we really can't file the returns till like the 25th, right?
Correct. And then let's not forget, too, that if you have children where you get the child tax credit, additional child tax credit, and EIC, if you filed early, they're going to delay your refund till
Right, but we can still file the return and get it going. That's why it's so important that if you have an I-10, you want to get it done today so it doesn't hold up your refund, because there's so much identity theft, especially with people with earned income credits and refundable child tax credits, that's why they're holding up the refunds. But it looks like we got we downloaded today a schedule of projected refunds. So it looks like the old way for everybody else, if you file, your return was acknowledged by Tuesday night, or is it Wednesday night of the 1 week, you get it deposited the next Thursday on a direct deposit. So that looks like it's still on schedule, but if you have children, earned income credit, additional child tax credit, any kind of refundable credit, looks like your refund's going to be held up this year.
Yep.
Correct?
Yep. Keep our fingers crossed.
Right. Well, yeah. I mean, when they're warning you, it's going to always be worse than they say. All right, let's talk about 2017 tax law changes. And again, you can call us 803-0930, 803-0930, star 930 on your cell phone. All right, this is the last year for the residential energy credit. Why don't you explain what that is, you guys?
Well, that's that $500 credit that is a lifetime credit that's going to be going away.
For what kind of stuff, Tim?
You mentioned insulation earlier. Windows, exterior doors, different things that you would do to your house to make it more
But they
energy
all got to
efficient.
be the premier Energy Star. You can't just put
Exactly.
in a junky window. It's got to be the high-end Energy Star
Exactly.
window,
Yep.
right?
Yep. It's got to
Same
be.
thing with it's like the highest series furnace, right?
Yep, yep. And most furnaces now, that's probably one of the reasons the credit may be disappearing, but most furnaces are that way, but you still have to make sure that it meets those standards.
Right. And if you haven't taken the energy credit up till you have till tonight, that's it.
That's
then
right.
It's gone. The residential energy credit is gone. But the renewable energy credit is still in effect. Right?
Right. Solar
So-
panels, what is that?
Biofuel.
Biofuel, yes.
Biofuel. Yes. That's still all there.
So if you were doing solar panels or geothermal kind of things, the 30% credit on the federal and the 20% credit on New York State is still in there for 2017. So if you're somebody that thinks you want to do a windmill or solar
Geothermal.
panels, those things are still in effect through 2017.
Or if you're industrious and you like the geothermal, and don't
Right.
mind digging a very deep hole.
I think it's got to be professional, Tim.
Okay.
Yeah, digging a deep hole is not going to work,
Okay.
especially this time of year.
That's right.
All right, and then this is the last year for 7.5% floor for medical for seniors. Again, if you're over age 65 and you're paying medical expenses and you don't want to move into this 10% floor, this is the last year to do that. Tax rates, again, were indexed for inflation, so you're going to find out that you have more money that'll be in a lower tax bracket for a little longer. The other thing is the standard deduction was also changed, but only for head of the household, and that only went up $50. So there was not a big change there. The health savings account, the maximum contribution is $33.50 if you're single, $67.50 for family, and the Obama penalties went up. And I guess, Tim, you got to speak about all the Obamacare penalties. It's interesting because with the new administration coming in, you know that there's such a, like yin yang. There's this tug of war going on about they're going to repeal and replace it, but in the meantime, Obamacare is still the law of the land. But there's a lot of exceptions to penalty, right, Tim?
Exactly. It's to the point now. If you look at the penalties coming up, the 2.5% of your adjusted gross income, with about $695 for each adult, roughly half of that for children. That means a maximum penalty for a household could be over $2,000, which basically equates, and this is where they wanted to get to, that your least expensive health insurance plan in the marketplace is going to be equal to the penalty. So,
in other words, go get the health insurance rather than the penalty.
Exactly, but like you said, we can always help them with those exceptions. There's a hardships. There's 13 hardships that can be different categories. Say that you've gone through a difficult financial position, that you've had bankruptcy, or you had to take time off from work to take care of mom or a family member, or you had a death in the family, things like that, those hardships. Or basically the 14th one is you make one up as long as you can support it and the IRS says that it's a good one, then you're off the hook.
And that's so good that you can make one. I will tell you, from an observer standpoint, it looks like what they were saying is just we're going to pretend like there's penalties, but really there's a lot of things that people can get away with if they just hang their hat on it. Exactly.
And if they can provide that documentation support and have the impact that it had on their lifestyle or their household, that the IRS is not going to pursue them for those penalties.
Right. And then there's if the health insurance exceeds more than 8.05% of your wages, that's another exception. Right?
Yep, that's a big one.
If you had it for at least 9 months or more during the year, that's another exception.
Mm-hmm.
If you are a conscientious objector.
That's a good way to put it. Yes, I would say that if you're a conscientious objector, but if you have several things that you can state that for your religious beliefs or just the way you choose to live your life, that you do not think that you should have to have insurance, then there are exclusions for that.
Right. And then the other ones are things like if you're part of a religious
health sharing.
health care.
Yep, health sharing, kind of just like the old co-ops. You know, everybody puts into the kitty, and then when you have a claim, you take out of the kitty. So, you know, if you're part of one of those that really isn't like a true health insurance plan from an employer or health insurance company, then that's a way you can exempt out too.
So, but here's the cool thing, I think, is when people come to somebody like EG Tax, we know all the exceptions to penalty. Many times people are sitting at home and they fill out their own and they're going to hit themselves up with this penalty, whereas we will know the exceptions and save them the exceptions to penalty, which is thousands of dollars.
Oh yeah, definitely.
Yeah.
And you know, the
$2,085 per family. So that's one of the great things about using a professional tax service to do your tax return. The other thing is, don't you find that people don't wait to get the 1095A form?
Well, you know, that sometimes they don't even realize it because of the way that the marketplace and their application works. They're just kind of missing out because it's not mailed to them till later, or, you know, they don't know how to access that, or, you know, the information's there. And we have instances where we've worked with clients that the 1095A was just never produced.
Okay, so let's explain to people what the 1095A form is.
That's the form you receive if you're participating in the marketplace and you're receiving either the monthly credit, the advance credit to help pay for your premium, or that you have the choice of taking the credit as a lump sum on your tax return. You're going to receive a 1095A from the marketplace that's basically going to say, here is what you receive throughout the year to help pay for your health insurance. Then that becomes part of your tax return. It's kind of reconciled to see if you receive the correct amount based on your income. And, you know, if one way or the other, you could end up having to pay some of it back, or you could have a shortfall and get more of a refund.
But the bottom line is you really can't do your return until you get the 1095A.
No.
You got a subsidy from the marketplace, or you're getting insurance through the marketplace.
And
right?
the other thing, too, the 1095A, the other thing that's happened with people enrolling this year is the databases have caught up with each other. We have several clients that we've worked with that have failed to file their 2015 tax return. They are not eligible to get a credit for their insurance in 2017 until that 2015 tax return is on file.
Right.
So
Okay.
they're losing out on
Mr.
it.
Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 cell phone. We're talking about the changes coming up in 2017. 2016 is only like 7 hours away, so you guys got to hustle to change 2016 if you want to have some deductions. All right, the other thing that's changed this year, the earned income credits now range from $506 if you're single with no children, up to $52.69 if you have 3+ children, and your income ranges from $20,430 with no children to $53,503 with 3 children or more. Now, here's the thing that I think a lot of people miss is that people with no children who have wages, who may not have to file a tax return because they don't have enough income, are entitled to an earned income credit, right?
That's correct. That's correct. There's a pretty small...
Yep, have wages. You know, they
I mean, they could be working at Walmart, a little part-time job, but they would get a earned income credit if they have wages and they're under the age of 65, between 25 and 65, and their income is under $20,430, and that doesn't count their Social Security. So I'm sure there's people that are listening who fall in that category, and you don't have to file, but you want to file.
Yep.
Right?
Yep. You got to always weigh those options to see, because just because you're under the filing threshold doesn't mean that's not going to be beneficial.
So, Tim, do we have Barb still waiting regarding her medical question?
Yes, we do.
Hey, we'll go back to the phones then. And hey, Barbara, how can we help you?
Hi, Esther. Thank you for taking my call. I've been pondering this all week. We itemize our deductions.
Okay.
And we're both retired, and I always meet the medical deduction and plus. So I just had a crown done, and we don't have insurance at the dentist. And the crown is going to cost us $820. And he just did the work this week, and he won't put the final crown in until January. And I'm thinking to myself, can I take a check over to the post office for $820, even though he hasn't billed me for this yet,
Yes.
take the credit?
Yes.
I can.
Yes.
Yes.
Yep.
Oh, that's amazing.
So as long as you're paying for a medical procedure and it's paid before the end of the year and you're an itemizer and you're going to get a bigger bang for your buck in 16 than 17,
right.
I would do it. I would do it. As a matter of fact, I was just thinking of writing a check for my guy who does all my advertising, Vito, who I love. He hasn't billed me yet, but I thought, well, I can fix him. I know I'm going to owe him $6,000, so I'm gonna write him a check tonight.
Very good.
The whole game is you want to take the deduction. They don't want the income. He actually doesn't have to claim the income until 2017.
Interesting.
But I'm going to take the deduction because I know I owe it to him.
Oh, this is wonderful news. Esther, another question. Do you do anything about the Social Security penalty that we pay when we did not take the Part B after 65?
What do you mean? Well, that's all done through Social Security. I mean, that's something that they're going to do because you didn't do it.
Right. Now, this is the deal. I don't know if you're going to have time to listen to this, but it's a simple thing. When my husband retired from a federal agency and he wasn't working anymore, we still had credible insurance with the government, and we took it for the next 7 years. And we were told at that time we really didn't need Part B because we had credible insurance. And also, I had been out since I was 57 on disability. And when I called the Social Security office, they said, don't worry about it. We'll transfer everything over, no interruptions. So I kind of let it fly by. And when I had to sign off on Part B, I thought, oh, I don't need this because I have credible insurance. Well, lo and behold, the new policies and information that come through Blue Cross and Blue Shield is Part B. If you had it, you don't pay copays, you don't pay coinsurance. And I thought, where have I been? So I go and I apply for it. Now they're
penalizing
a penalty. So I've been fighting this for the last 2 years, and I'm still in the throes of this deal. And I'm telling them, and I found this quote online, and it's documented that if you were not given proper information back in the day, that you have a legal right to have this waived. What are your thoughts about this?
Well, I think this, and you guys back me up here. If you keep fighting and you're in the right, eventually you'll win. But I will tell you, people fall by the wayside because they give up before the end. You know, sometimes it takes a year, year and a half, 2 years. But I would fight on.
Well, you're giving me information and good advice, because every time I check with this and they deny it, I get another answer. Keep going. In fact, I got a Social Security employee the last call, and he said, you're going to get denied. Call me back. I'll give you the number where you get the forms to appeal this by court.
And appeal it. Make sure you appeal it.
Yep, and keep on it.
Definitely.
Well,
I mean, when especially, and Tim and Chris can tell you, but Tim especially, who deals with New York State and the federal government regarding health insurance, sometimes you have to appeal and appeal and appeal, and sometimes you have to give them the law because it's so complicated. You know, it's not even just taxes you're dealing with now. You're dealing with all of the Social Security and all the health care laws. But I will tell you, if you keep going, you'll win. And
numerous times, you know, when you get to that point where it's going to be scheduling a hearing, that's when they'll make the decision to probably give in, because they don't want to have to go through all that.
Okay. And, you know, this is the crux of this. Every time I've called and I've debated this, they tell me, well, your husband wasn't working at the time he was getting the insurance. And I thought to myself, no, he's retired, but we're still getting the insurance. The health insurance through the government is a credible insurance. What did you expect us to do?
Right.
Exactly.
I would keep fighting.
Okay, great. Well, you're wonderful. I thank you so much.
Thank you, dear.
Giving me hope.
Happy New Year.
Happy New Year, Esther.
All right, thank you.
Okay.
I'm Esther Golias, the tax lady from EG Tax. We're going to take a short break. We'll be back with your questions. 8030930, 8030930, star 930 on a cell phone. We'll see you on the other side. I'm Esther Golias, the tax lady from EG Tax. Hey, our offices, all the 33 local offices, we have 35 total, are going to be open up on the
January 18th.
Which one?
January 18th.
January 18th. What do I know? January 18th, we're going to be ready to rock and roll. We really can't send your return till like the 25th, but we'll have them all ready to go. Bear in mind if you have children that qualify you for the refundable child tax credit or the earned income credit, they're going to hold up your refund. We suggest you change your W-4 at work so that you get your refund up front so that you don't have to sit around and wait for your refund. I think if you did it, you'd be really happy. I mean, I keep telling you to do what Auntie Esther says to do. Okay, this year, Social Security ceiling is $118,500. So once you make $118,500, they're not going to take any more out of your FICA. Canceled debt is tax deductible on debt up to $2 million on a foreclosure on your personal home. So it'd be quite a house that they're foreclosing upon. Business mileage has to reduce because the cost of gasoline's gone down, right? From 57.5 cents a mile to 54 cents for business, 19 cents for medical, down from 23 cents for medical, and charities stayed the same at 14 cents. AMT has been increased by $300 so that they're not going to be in your pockets for alternative minimum tax this year by a little bit more. You can reclassify your Roth back to a traditional by April the 1st. Now, if you went ahead and did a traditional to Roth in 2016, looking at 2017, where they're talking about the tax rates going down, it would be in your best interest to reclassify that IRA back so you're not paying taxes on this year. I mean, if you rolled over $100,000 from your traditional to your regular IRA and you're in the 25% bracket, you're going to pay 25% federal, let's say about $33,000 between federal and state. If you reclassify that back to a traditional, you pay nothing. And then next year, if you want to do it when the rates go down, which I think they're going to be, it would be $22,000. So I would rather pay $22,000 rather than $33,000 on the same amount of money. That saves you $11,000, right?
Exactly.
That's right.
Okay, and then New Year's resolutions. If you're in a company that has a pension plan and you're not in it, especially if they have an employer match, you are a crazy person. Would you agree with that?
Oh, definitely. You're throwing away money.
You are totally throwing away money. I mean, if your employer would do a 3% match and your wages are $40,000, if you put $1,200 stinking dollars into your IRA, they're going to put in $1,200. I mean, so promise yourself you're going to toddle on down to HR and join your pension plan. If you put in $900, they're going to match $900. I mean, come on, you guys.
That's found money.
Tax plan. Listen to Ask the Tax Lady because we're going to help you to navigate the new tax law changes. And believe me, there's a lot of them that are going to come down the pike this next year and the year after, and we're going to help you to do that. Change your estimates if you see your tax bill is going to go down. I mean, if you're paying a lot of estimates to the federal government right now and the tax rates are going to drop, you can pay less, right? So that's a good thing to do.
Less taxes is always good.
Yeah. All right. And then, is Carol still on the phone?
Yes.
All right. Why don't we talk to Carol while she's holding? Hi, Carol. I'm Esther Gilius. How can I help you?
Hi, Esther. Happy New Year. And
Happy New Year to you.
Oh. I had heard a while back, who knows when, because I listen to you all the time, about if you have rental property, it's good to have an LLC.
I think so.
I'm not sure what an LLC is. What is it, and why is it beneficial for me to do that?
Hey, Chris, you want to explain it to her?
Sure. An LLC is a limited liability company. So what that means is that the company is the owner of the property, basically. So if something happens on the property, the only tax person that could be held liable would be the LLC. They couldn't go after your personal house. They couldn't go after your personal bank account. Only the assets in the LLC could someone go after in a lawsuit.
So it's like a cheap insurance policy, Carol. So
Now,
when you don't have an LLC and somebody breaks their leg on your apartment, they sue Carol. But on an LLC, they sue the asset, the owner of the asset where they hurt themselves, the rental property. So all that's at risk is the rental property versus all the assets Carol has.
right, and how, I mean, I don't know, because I said to my son about that, and he says, well, that's going to be really expensive, Mom.
It's
and
not, though. It's not. I mean, it's what, $125, $150 to do an LLC. And that's it. I mean, you pay insurance all the time for your property.
Well, yeah, and
it's tax deductible. I will tell you, anybody that's got rental property or small business, I suggest that you do an LLC.
And any attorney can do that then?
Well, actually, and I'm not saying anything bad about attorneys, because your attorney can do it, but you can actually go on all those, LegalZoom, you can go on bizfilings.com, and it's really inexpensive to do.
Okay, now do you have to change the deed on the property then?
Well, that would be, I don't know, Chris, do you know exactly? I think you have to list it on the deed. You have to redo the deed.
The LLC would have to be the owner of the property.
But again, if you talk to your attorney, you talk to LegalZoom, you talk to BizFilings, they'll help you to do it. You can come into our office. We don't charge to help you to do it. So I would suggest that if you are the owner of a business or a rental property where, we're in a very litigious state especially, that you would do that to protect your assets.
Thank you very much.
Thank you, my dear.
And hopefully it won't.
Happy New Year.
Brief.
Okay, other things. All right, change your W4 at work. We talked about that. Promise to do better bookkeeping for 2017. Nobody likes it. It's a pain in the keister, but better bookkeeping means a better tax return. Get your taxes paid. If you are somebody that owes money every year, change the way you do things, and EG Tax will help you to do this. Improve your credit. That's another thing that you want to make sure you do in 2017. If you've had a struggle with your credit, EG Tax will help you to improve your credit score, and do a budget. I think that's so important, to live within your means or below your means, which is not really the American way. But until 2017, I'm Esther Golias, the tax lady, with Christopher Fabian and Tim Eliason and EG Tax. We love you. We thank you for a wonderful 2016. We're looking forward to 2017. God bless you and your family, and thank you for everything.
Happy New Year.
Bye-bye. Happy New Year.